have more for you just after 7 o'clock. Remember that weather forecast coming up as well before 7. Yesterday, we were looking through the newspapers, and the front page of one of them, it's a Telegraph, I think, saying that if you've got savings, forget savings accounts. Put them into stocks and shares. This is advice that many people adhere to. Some people put it into property if they've got significant sums to invest. But where should you put your money? Peter Davies is an independent financial advisor with Create Wealth in Cardiff. Good morning.
Good morning, Ollie.
Does it depend on your outlook and whether you're willing to take a risk as to where you put your money, do you think?
Yeah, I certainly think it does. I mean, it depends on sort of time scale and your attitude to risk, and also the sort of the returns out there in the marketplace. 2009, we had a good year on the stock market, and it's been followed up by another pretty good year in 2010 so far.
Savings accounts, though, I mean, the interest rate is low, isn't it?
Interest rates are at rock bottom. We're at the lowest interest rate period now for, I think, since records began. Base rate at 0.5%. It looks likely to sort of stay at that level until probably the end of 2011.
So what are the best deals out there for savings accounts? If you had a half decent sum of money or some money that you wanted to put away and you weren't too keen about, you weren't desperate to get your hands on it at short notice, what could you get out there at the moment?
I mean, companies that we all know, like Northern Rock, are offering 4% gross fixed now for 3 years,
right.
Which in this low interest rate environment is a pretty good deal, with no risk involved. If you wanted instant access, then if you shopped around sufficiently, you might find 3% variable.
And if you obviously your tax-free allowance as well. What's on ISAs at the moment?
Well, ISAs again, for some reason, aren't very attractive. The rates available on ISAs, which is a shame, really. Banks and building societies don't seem to be paying the best rates available on cash ISAs for some reason. Unfortunately, cash ISA savers have had a bit of a tough run in the last couple of years.
Is it possible to play the stock market then at low risk and get a better return than that?
Well, I think the risks are high on the stock market. Whilst a lot of commentators and investment gurus believe that 2011 will be a good year, we've all got to remember the risks involved. We all remember, what's happened to BP of late. Large companies such as Lloyds TSB, I mean, their share price fell from sort of late 90s, £10 a share, down to sort of 50, 60p a share.
But to invest in shares doesn't necessarily mean choosing a company, does it, and dealing with a stockbroker? There are funds, there are savings accounts there that you can spread your risk across the whole of the stock market, or just blue chip companies or some companies?
Yeah, absolutely. There are large capitalised company funds that are professionally managed, unit trust funds. Again, you can shelter your up to £10,000 a year via an ISA. And independent financial advisors like myself, we regularly recommend those investments so that clients' money is sort of spread amongst typically, say, 50 to 100 shares, thereby reducing the risks.
So are you recommending funds ISAs over cash ISAs at the moment then?
Well, bearing in mind the lack of return, provided a client is happy to take a sort of a 5-year view and accept a reasonable degree of risk to their capital, then yes, we would go down that route, looking at different markets, potentially global, not just necessarily the UK market.
Thank you very much. Thanks for coming in. Peter Davies, independent financial advisor.
8 minutes to 7 now.